Welcome to Your Week in Brief. My name is Likiani Eli, and Your Week in Brief starts now. The week ending 24th May had several activities going on, including the presidential state visit to the United States of America, the release of the economic survey by the Kenya Bureau of Statistics, and the International Energy Agency 9th Global Conference, which took place on 21st and 22nd May. We will, however, be focusing on the economic survey and the president's state visit, which will be brought to us courtesy of Stella Soke, who will take us through the two. So, Stella, what are the key highlights from the 2024 economic survey?
Yes, Eli, the economic survey has a lot to unpack, but let's see how the economy performed in 2023. So, to start us off, the real GDP grew by 5.6% in 2023, and this was 0.7 percent points higher than the revised growth of 4.9% in 2022. So, following the relatively favorable weather conditions, the main driver of the growth was a rebound in the agricultural sector, which grew by 6.5% compared to a 1.5% contraction in 2022. So the secondary sector also expanded, but the growths across board was slower than what was recorded in 2022. For the secondary sector, we have the subsectors like manufacturing, construction, electricity, and also water supply. So this reflects the constraints that the sector faced, especially the manufacturing and construction sector, with relation to high inflation, increased tax burdens, and high input costs. On the other hand, the real gross domestic expenditure rose by 3.7%, higher than the 2.6% recorded in 2022. And over the same period, the real value of exports of goods and services declined by 4.5%, a faster rate compared to the decline in the value of imported goods and services, which contracted by 3.1%. On matters trade, the total volume of trade increased by 7.6% to 3.6 trillion in 2023, and this was from 3.4 trillion in 2022. So the growth was mainly driven by a 15.4% increase in total exports earnings and a 4.9% rise in the total imports bill. This was occasioned by the depreciation of the Kenyan shilling against currencies of key trading partners, which then made exports from Kenya cheaper. On the other hand, we had high international prices of principal import commodities, and this was especially on petroleum products. On the upside, the faster growth in exports compared to imports led to a slight but welcome narrowing of the trade deficit from 1.62 trillion in 2022 to 1.6 trillion in 2023. Further, there was an improvement in the export-import cover ratio from 35% in 2022 to 39% in 2023. So the interpretation is that Kenya's exports can only cover 39% of the imports, and the ratio rubber stamps the fact that Kenya remains a net importer and more money is spent on imports compared to what the country earns from exports.